Here's what's happening in the San Diego market today. So just a few quick data points. Inventory is down. It's over 4,000 available homes for sale, which is something like a 19% drop off from last month. Available homes are up 9.5% compared to November of last year, but we're still seeing inventory decline from its current highs. On average, listings are staying on the market about 29 days, which is up from about 17 days compared to last year. So homes are staying on the market longer. The median home price in San Diego today is $770,000, which is 11% off the spring peaks and down 2% from last month. Now, $770,000 median price November of 2022 is almost exactly in line with where we were at November of 21. We're still up substantially from pre-pandemic levels, but we are starting to see the market depreciate a little bit. Now, where the market goes from here, it depends on a variety of things. We are very interest rate sensitive right now. If rates continue to go up, it's likely that the housing prices will continue to pull back. If we see a vast improvements, rates going lower, then we'll see buyer demand, perk up again and get back into a position where prices are likely trending upwards. It's interesting because even though prices are even year over year, they're down 11% from the April peaks. They're down a couple percent from last month. So what does this all mean? It's interesting because our inventory is still relatively low. We have about, like I said, 4,000-ish available homes for sale, and we're actually seeing inventory trend downward for a variety of reasons. One is the interest rate is definitely having a factor. So people who are thinking about listing who might have listed their homes or who have listed their homes, they're not getting the price that people were, a few short months ago. So that's causing them to think, well, if I can't get that price, then I'm not going to sell. Another thing is a lot of people who have been in their homes for, the last year or more have taken advantage of really low interest rates. So people are sitting there in their homes with 2.5%, 2.7%, 3% interest rates, and they're looking out going into an environment where interest rates are, 6.5% in some cases. That is causing a lot of people to say, I'm good where I'm at. So it's limiting inventory. Another thing is we're still seeing foreclosures. Even though foreclosures are on the rise, there's not a glut of foreclosures with the strong job market and low interest rates. Most people can afford their payments. So there's not a glut of supply. And because of the future forecasting with regards to high rates and properties depreciating in value, we're not seeing a ton of new building either. There's also, red tape and NIMBYism and some other things that are keeping building low, but those are our three main sources of supply: resale, new construction, and foreclosures, and we're just not seeing much of any of it for a variety of different reasons. That's actually a good thing for our market currently because demand is so low that luckily supply is pretty low too, so it's keeping a lid on just how fast home prices are depreciating. Where if we saw a wave of foreclosures or for some reason a wave of resales or new construction with demand continuing to stay low, the supply-demand imbalance could end up tipping to such a point, which it is in some parts of the country. And I'm not going to sit here and paint this rosy picture like San Diego isn't experiencing depreciation off its spring highs. We definitely are. The other thing I'm seeing is there are a ton of buyers and frankly sellers. There's a ton of people on the sidelines waiting for the other shoe to drop, so to speak. They're waiting to see what is the Fed going to continue to do with interest rates? What does this mean for mortgage rates? What does that mean for demand? What does it mean for my job? Am I going to have a job? We've got the holidays coming up, so some people are like, I'm just not going to deal with it until after the holidays. So there's a bunch of people that I talk to every single day, potential buyers, potential sellers, who are just kind of waiting on the sidelines, waiting until the volatility of the marketplace calms down. If we do see interest rates start to go down some point, whether it's 3 months from now, 9 months from now, a year from now or more, at some point it's likely that the interest rates will start coming down again. And when we see interest rates start coming down, you will see buyers re-enter the marketplace with enthusiasm and drive prices back up. Right now, we're sort of in this odd situation where not many people are selling, not many people are buying, and the destruction of the Federal Reserve's continual increase in mortgage rates is definitely being felt in the real estate game and some other aspects of the economy. So just how much these mechanisms affect the broader economy, and that will determine what the Federal Reserve ends up doing with regards to interest rates. And so I think everybody's just kind of taking a wait and see approach while they wait out what the Federal Reserve is going to do. And then the bond market, which controls interest rates, will trade their bonds in reaction to what they think the Fed is going to do in the future. That's kind of what's going on in the market. We've got, prices depreciating. We've got buyers on the sidelines, sellers who aren't really willing to sell, and the ones that are selling are super motivated and are willing to cut the price to attract the relatively few buyers that are in the marketplace. And frankly, this is just a season. This too shall pass. And as always, it's not so much about trying to predict the next thing that's going to happen, as much as it is trying to make a sound buying or selling decision for your unique situation. So does it make sense for you personally, financially, geographically, all of these different things? So that's kind of what's going on in the market today. And as my valued past clients and friends and contacts, we're trying to keep you informed with as much good information as we can. So hopefully this was helpful to you.